It's a no-brainer and something that's so easy to achieve that, in my mind, everyone who's been working in the UK and now is offshore should look into it. Let's look at an example. John is a 47-year-old male who left UK 12 years ago to work in Asia. He started working when he was 20-year-old, and he's been working in the UK all his life prior to his departure. From a national insurance perspective, we have the following. Started working when he was 20 years old and finished working in the UK when he was 35. This means John might have 12 years of contributions in his national insurance number. The reason I've said might is because if John has been unemployed throughout this time, he might have some gaps in his work history. For him to find out and double check everything, he must log in onto the government website and check his records. I will add a link in the description below where you too can do that. Okay, now we know that John hasn't contributed anything in his UK state pension since he left the country. For him to be able to access the full state pensions, that means John will have to pay the full 35 years of contributions. The good part is that even with his current years, John will still be entitled to a part of the national insurance pension, which can be calculated very easily. £10,600 divided by 35 years for the full state pension, meaning that 1 year of contributions equal £302. In our example, John has 15 full years of contributions times £302 means that at the moment, John will be entitled to roughly £4,500 per year from the moment of his retirement at 66. If John will like to backtrack his contributions, which basically means making up the missed years and filling out any sort of gaps in his national insurance number, he can fill out a form, again, link in the description, send it to HMRC, and he will get an official answer for his missed payments. John is actually in a privileged position where he can make up any gaps by paying something that's called voluntary class 2 contributions, which are roughly £12 per month. Backtracking the last 12 years means that his retirement income will go up from £4,500 all the way to £8,100 per year. From there, Jen can also set up a direct debit every month for his further contributions to go out of his bank account without him making any sort of effort. In this way, he will be able to reach the full state pension. It's a no-brainer and something that's so easy to achieve that, in my mind, everyone who's been working in the UK and now is offshore should look into it. Drop a comment here if you have any questions and I will try to answer them all.